Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim, and Happy New Year.
Happy New Year to you and all of our listeners.
Tim, the setup that you suggested would happen last year happened. What do you think is going to be the setup for this year?
Well, digressing to last year, the one thing with the setup last year is it took forever, I think everybody will agree with, to fall in place. As we closed the year and things were falling in place, I think that by and large people were in, I won't say denial, because denial is maybe it is denial. I don't think people realize, maybe a better word, what potentially is going on here, or what I think is going on here. The potential of it is another thing. But, the higher degree setup with the topping of equities, that is potentially in association with this higher degree bubble that we've been talking about, this liquidity driven bubble, the topping of commodities and the bottom of the dollar, it took virtually all year to come to pass, but it came to pass. And now as we move into this year, I think what we're going to see is, I think the path for equities is that we're going down into a 4-year cycle low, in my world. And, I think commodities, the CRB, there's a 3-year cycle low coming due. And of course with that, we will see, a bottom in crude oil, and, we'll see some pretty good bounces. But I don't think we're there yet. I think that we move lower still. I think, most people probably believe that we've seen the bottom, and there is, like I said, there's no doubt there's evidence that we're moving that direction, but I don't think we're there yet. I think we move, lower, maybe shockingly lower into these higher degree lows, and then it's going to be the real test. People will think it's back. We're going to see the rally in across the board, pretty much, I believe, in the commodity complex. I think that we'll see a softening of gold during that time. And, then the truth, as far as, or I should say the market's decision as to whether it really is the bursting of the bubble is going to come to pass with this rally out of the 4-year cycle low.
So, with that setup, what do you feel is going to happen in each particular sector?
Well, I think it's two things. I think we go down, in the semi-short, I say semi-short, over the next few months type thing. I think we go down into these higher degree lows, and then we rally. And I don't know how long that rally is going to last. And when I say rally, I'm talking, in equities as well as commodities. It's going to last until we get the other setup in place. That's going to be the technical test, as to whether, like I said, the higher degree bubble really has popped. And, as we go, let me say this, as we go into, I hate to have a preconceived notion, but it's hard not to. And some people will say, well, you're a primer bear, you have a preconceived notion anyway. No, that's not true. I've seen this bubble for what it is, and it's just extended and taken a lot longer than anticipated to peak out and to get to this point. But anyway, that said, kind of my expectation is that the counter trend bounce out of the 4-year cycle low later this year will more than likely fail. I don't know how long it's going to take it to fail, but more than likely it will fail. And the reason I think that it's subject to fail is because of the much longer term, economic cycle. I got, data that I've covered in some of the recent research letters showing this in great detail, showing that this is the sixth economic cycle, which has been liquidity driven, I might add, that is trying to roll over here with the bubble. And so if the inability to reinflate the bubble is going to result in the bursting of this sixth economic cycle, and I think that the results of that could be quite dramatic. So from a technical perspective, what I'm saying is that the 4-year cycle advance and the 3-year cycle advance in commodities is going to be the test. And that's coming up this year.
We'll have more with Tim Cyclesman Wood right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Tim Wood. Tim, what's your outlook for crude?
I think it's going to follow pretty much equities and the 3-year cycle in the CRB. Moving into, we have an intermediate term low. It occurred back in December. I think it's counter trend. There's probably another push down into the higher degree lows, and then it's going to bounce with everything else. And like I said, that's going to be part of the deception or test. I guess it remains to be seen if it's truly a deception, but it'll be part of the test and the deception, if I'm right, that, everything is back, that it's over. And like I said, I'm not convinced that's going to be the case.
Is the U.S. dollar going to continue to be strong, or is it going to weaken?
The U.S. dollar is moving into some intermediate degree lows now. And, we had the higher degree 4-year cycle low in the dollar this last year. We talked about that. That was kind of the cornerstone of some of the analysis that was going on this year or this last year that we were, our expectations were centered around that, I should say. And so there's no indication at this point that longer term advance has run its course. So I'm thinking that, at this point, we once the decline into this intermediate term low has concluded and, we move into the timing bands for it and we get, the low in place and confirm that it's higher prices are expected with the dollar.
We'll have more with Tim Wood right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Wood. Tim, what's going on in the bond market?
Well, as I see it, we have all these longer term cycle lows and highs, things topping and bottoming. I guess we're at as you would say, a kind of a transitional phase, where, things are, turn points, maybe a better word. But, I'm thinking, that we probably have seen the 3-year cycle low in bonds. And when I say I'm thinking, I'm suspicious of it. I can't quite prove it yet. It's on the radar screen. I'm looking at it. I need the confirmation. But I'm thinking we've got a longer-term low in bonds, which means bond prices are going to go up, yield down, and that kind of fits if you think about it with, if there's going to be weakness in the market, generally there's the inverse relationship there. I said generally. And so I look for 3-year cycle advance up in bonds, but then ultimately what I see is that this 3-year cycle advance in bonds will be what I call a failure. It'll be kind of short-lived as far as the 3-year cycle goes. It runs out of steam and then rolls over, and then we see much lower bond prices and much higher yield.
Gold, is it going to go up, or is it going to plunge along with the regular market?
Gold, every indication is that we had the 9-year cycle top. And based on that data, every indication is that we're still moving into the low. The advance out of the August low was expected. That's not a surprise. It was a clustering of intermediate and there's an annual degree cycle low, or an annual degree cycle, I should say. And so we had a clustering of lows. There's been a real good counter-trend bounce, but it's not a surprise. It's exactly what we was expecting. I do think it's counter-trend, and then the expectation is that it turns back down and moves lower, probably along with the decline in equities, if I'm right. And it may be with gold, with this 9-year cycle, it sounds bearish to say that the 9-year cycle top, is in, or anytime you say any cycle top is in, I mean, the image you have in your mind is that, it just plummets or goes much, much lower. In the case of gold, I'm not totally convinced that's the case. I do think there's lower prices out there for gold with this cycle. But what we may see is more of a basing with this 9-year cycle decline, if you will, for something much, much better down the road, if the real unraveling of the bubble does occur. Gold may end up being the safe haven, but not with this cycle, not yet. And so that said, I'm just, throwing that out there that, I am objective about gold. If we see something else trying to develop, then fine, I'll roll with it. But right now, every indication is the 9-year cycle top is in place. And, I don't know what the decline into the 9-year cycle low is going to yield. Like I said, it may be more of a basing thing instead of a more dramatic decline, but I do think, like I said, there's lower prices before this 9-year cycle is done.
What's your outlook for crude?
Pretty much the same as the CRB that I talked about. A low, intermediate degree low is in place, but I think we move lower with equities into a clustering of higher degree lows a little later this year, and then a bounce along with equities out of the in crude oil. In the CRB there's a 3-year cycle, equities there's a 4-year cycle, and they happen to be bottoming in close proximity. A little bit later this year, and I think they both turn up out of that in what I believe will prove to be counter-trend advances.
What do you see for agricultural commodities? Sugar had a nice little pop the other day.
It's something I don't follow the individual agricultural commodities that closely. I look at the CRB, and pretty much everything's going to move to that. Of course, there may be some outliers, but I don't look at anything in particular. If there's something you would like, or some of the listeners would like, for me to look at, like soybeans or sugar or something, I'd be glad to do that. But I look at the basket, the index itself, if you will, with the CRB.
Inflation was down last month. Does that affect the market?
I suppose fundamentally it does, but from a technical perspective, it makes absolutely no difference. It's all baked into the price, the setup, the structure, the statistics, and in that case, like I said, the setup is in place to move into the 4-year low.
I heard one analyst on television say it's too late to get out of the market if you think it's going to crash, so you just have to ride it out. Is that true?
That's the problem. No one wants to believe, that that's a perfect example of the danger of this thing. Think about it. Someone doesn't believe that, the setup was occurring or that the market's peaking or whatever the case may be. They don't want to realize it or whatever, but they get trapped in the market. So the market's down, like it is now, and they say, oh, well, it's over, or it's too late to get out. I can't get out now. We got to be near a bottom. And it keeps going, and then it keeps going, and then it keeps going. And then, and then that's what causes the capitulation and the bottom. It's that psychology. So that is the danger. And so what I see that going on now, but I don't think people, like I said, realize, and most analysts are not even, they don't see it, and I don't pretend to have a crystal ball, but based on my work, we're not there yet. The 4-year cycle low is ahead, and so I think we get the capitulation into this low, and it's going to leave people, like you said, trapped in the market. But then to make matters worse, if my scenario is correct, and we see this tremendous advance out of this 4-year cycle low, and that's going to draw people back into the market, or the ones that do ride it out, they're going to think, oh, okay, it's over now, everything's fine, glad that's over, that was ugly, and then when it starts to weaken again, it's just going to train the, I don't mean for this to sound the wrong way, but it's going to train the, referring to Pavlov's dog, it's going to train the dogs even more to stay. If he's like, oh, it's just another, and so it's going to, the way it's setting up, what I'm saying is that it's causing, complacency, even more so than what we have now, I think, with the setup that's going to be coming. And if that does come to pass, of course, it can change, and we'll be watching the statistics and stuff along the way. But if that does come to pass, I think that the setup is even going to be, more dangerous than it is now.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Tim or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.